Good morning, this is Anka Metcalf with TradeOutLoud.com. Welcome to the pre-market game plan for the major futures indices, gold and oil for today. It is Thursday, it's October 26, 8:40 a.m. Eastern Time. We're going to begin with the E-mini Dow Industrial Average. E-mini Dow Industrial Average has topped into Tuesday trading session 23,436 for the high, consolidated throughout the extended session yesterday and broke down right from the open 23,375 all the way to this next support level at 23 to 20-ish area, so very close, very close actually to the 23,200 level. Reversed, 180 reversal, consolidated back to the upside, and right now we are into this area of minor resistance from this prior low from yesterday's trading session, 23,364. This is going to be the big line in the sand today. If we break above this area, we're going to continue to 23,400 and obviously into this prior high. Still projections for 23,500. And even higher for today. If we fail at this point, this may be part of a larger turnaround that may come in the upcoming days. We are expecting for the markets to be relatively sideways throughout the afternoon trading session. We are expecting big earnings from Google and Amazon after the market closes. So after 4 o'clock, we are expecting these earnings, and the market may be waiting, maybe wanting to wait for these big earnings to come out to take a decision whether to take the price higher or lower. So keep in mind today, we're still looking bullish for a continuation higher. We're still trading into the 365 area, which is resistance. And at this point, a turnaround and a break below the 23,300 would signal a short that would take the price back down to the 23,200 level and back into the next level at 150. Let's take a look at the S&P 500, and the S&P 500 also double bottom on the hourly chart, has touched upon the 2542 area. I did have an alert for the 2550 area for a possible swing long. However, I did not take the swing long because this was a very sharp correction. As you can see here, we had 3 continuous, very sharp hours of selling after a little bit after the open. So actually it happened after 11 o'clock. So we were pretty much sideways until 11 o'clock, and after 11 o'clock we did get the breakdown. Very sharp climactic move to the downside. Price came in to test this minor resistance area at 2560, consolidated in the overnight trading session. The lack of economic releases, and keep in mind we do have ECB today, so right now we're waiting for a reaction from the ECB and the shockwave that is coming from the ECB, and then the price is going to probably decide a direction. So at this point we're trading into minor resistance 2563. We still have lots of overhead resistance in the S&P 500. Is one of the choppiest. The pattern is still a little bearish at this point. A turnaround can happen because a turnaround can happen, and especially after over 65, over this cluster of resistance right here over 65, that can take the price back up to 2570 and 77, and projections are for higher. The highest target that we have is for a medium term, it's going to be 80.50. 2600 possible into the following weeks or maybe into next month. So we're going to see that as a projection probably till the end of the year, 60 or 62. Let's take a look at Nasdaq, and keep in mind front and center Nasdaq is going to play a major role today in price, because we do expect earnings from 2 of the biggest components of Nasdaq, which is Google and Amazon, and that is going to shape up the way Nasdaq will be moving forward. So far very sideways. Yesterday, typical sell-off, and we did have the BOC release, took the price down. A 180 reversal back to the upside, ended the day close to positive, not quite positive, but close to positive. Today, we're only down 4 points in E-mini Nasdaq. It's the only index that is down on the day right now. 54 points to the upside for the E-mini Dow, 2.5 points up for the S&P as of this point, and Russell is up 1.4. So we're relatively flat for the open. Dow is the only one that is the most bullish at the moment. So Nasdaq is establishing support at the 55 area. And the next support level is obviously around the 620 and 6,000 level. 6,000 level, so between 620 and 6,000 level is minor support from the daily chart. We do have plenty of support in this zone, and this is going to be the cluster and the game plan for today. On a break of 55, we will look for a correction lower back into the 20, and 20 we will look for a bounce back up into the 50 or 55 area. So we're very common with these whipsaw effects that are happening right now into the market. We see that these very, very shallow dips that happen onto the daily chart are being bought immediately in price ranging, and right now the chart pattern still looks bearish because we still have a succession of lower highs and lower lows. However, keep in mind decision point today with that after the close. Let's take a look at RTY and the Russell, still hovering into this 1500 level, may have room to continue higher into 1505, 1510, and 1515. I would be more bullish on Russell if it breaks the 1505 area. This is going to confirm that it may be ready to continue higher. Other than that, it's into a very, very choppy area. All right, let's take a look at oil for today. Keep in mind we did have oil numbers yesterday at 10:30, and as you could see, we didn't have much of a reaction into yesterday's news event of inventory numbers. Still at the same price, 52.28. This coiling up at this range may be a decision, so keep in mind that we do have multiple tops right here. We do have double top right now onto the hourly chart. We also have a double top that is on the daily chart, and keep in mind we still have room to continue higher. We've talked throughout this week about possible targets into $55 for medium term. However, we're trying very, very hard to sustain these upper levels and to sustain $52 as a support level. So we're going to see what's going to happen, but the real confirmation is going to be over 52.55. 52.55 is the bullish area, continuing higher, and under 52 we're still going to remain in this choppiness environment. So as of right now, I don't have a clear read on price in oil, and that is not because of the technicals, but because of the fact that it's not offering us any low risk opportunity and for a better return. Let's take a look at gold, and gold is down on the day 2 points, actually 2.2 points. Overall pattern bearish. We have this succession of lower lows and lower highs. So as you can see here, look at the moving average. So it's just it's just hovering all over the place. Prices up, prices down, prices up, prices down. The price still remains below this 1285 moving average, this 1285 price, and also below this resistance area. And we're also getting selling pressure from this 200 MA that is trying to push the price lower 1275, 1273 area is the breakdown area as well. Keep in mind that we do have a lot of support from the daily chart at 1268. So between 1268 and 1270, we also have a low at 1262. So a possible correction to those areas may be possible. So that's about $16 all the way into that area. So that's pretty considerable area to test. So keep it in mind, we still have a triple bottom right here at 73 area, so we may bounce off this area, but as you can see, it doesn't have a lot of energy to continue all the way and tackle these highs in order to continue higher. Obviously, we need to trade over 85 right here to break to the upside. If it breaks over 85, I will be looking for a swing possibly into the 1300. So this is going to be the game plan for today and for tomorrow, obviously, if we're going to remain at the same levels. This is all for now. Thanks so much for tuning in. I hope you all have a very profitable trading day, and also follow us on our private Twitter feed. See you tomorrow.